Welcome to your final financial stop, where we cover basic to advanced financial topics on a day-to-day basis, where you can understand what's happening in the market and what's going on in the world around you. Today's episode, we're going to be talking about Bitcoin and different types of cryptocurrencies and where they came from, how they started, and why are they still around. Keep in mind, I am no professional. I've just been doing this for many years, and based off of my trade organizations I've taken part in, it's my experience and my knowledge that I'm bringing to the table. I should not be responsible for any information that I do not or do include, so please do your own research and understand that it's very risky to invest in any type of deal, whether it be real estate, stocks, or cryptocurrency. So like I said, do your own research, but be safe and have fun. Best of luck to you. Enjoy the video. So who, what, when, where, and why is Bitcoin a thing? Well, Bitcoin is a decentralized digital currency that transfers wealth and other assets without relying on a third party. A third party is an entity that provides products or services to your customers on your organization's behalf. They're not the principal in the transaction, therefore they share a lesser interest than you or your customer does. They typically have access to sensitive data like your company's customers and employees, as well, and this can include escrows, collection companies, customer employee company databases like marketing agencies. Now, the past of Bitcoin started back in 2008 by an anonymous maker or group of makers known as Satoshi Nakamoto. 18 million Bitcoin about are currently in circulation today, and there will only be 21 million ever to be allowed. This is different than the gold standard. Gold is constantly mined, and there's no sure way to determine how much gold there really is available, making it a relatively scarce resource. So if a huge meteor that was made out of gold crashes down on Earth, what would it be worth? You know, Bitcoin, there will always be 21 million. Bitcoin is to create a peer-to-peer payment system that needs no third party, like a bank or marketing corporation, to process a transaction or transfer of data. It uses proof of work, which utilizes mathematical algorithms to confirm transactions all over the world. There are other coins that use proof of stake and proof of history, but we'll get into those as the time progresses. So Bitcoin is decentralized information. That's what cryptocurrency is. It uses cryptography to decode and access and verify these transactions and data transfers. What does it mean to be decentralized? Well, not one person, group, entity, government, corporation has the power to change, erase, or duplicate information on the blockchain. Instead, Bitcoin can be accessed by anyone, anywhere, and can be done pseudo-anonymously, making it transparent and decentralized. Basically, you have to have a wallet in order to buy or sell Bitcoin, but you don't have to put your name, your address, your bank out there. You can literally just have your wallet right there, which makes it pseudo-anonymously. Another thing is you don't actually hold the Bitcoin in your wallet. It's just distributed over the blockchain, and as crazy and as unsafe that might sound, there are cold storages that you can purchase. This Ledger Nano S, you can basically put 1,500 assets onto this little thing, connect it to your computer, and then your Ethereum will sit there forever. The only downside to this is it comes with a password that you have to remember. If you forget the password, if you don't write it down somewhere, your coins are lost. They're gone forever, which is kind of the good thing about Ethereum and its value and why they have no max supply, and Bitcoin has 21 million. We'll get into that later, but to attack this system, one would need to operate 51% of the computing power that makes up Bitcoin. So if there are 10,000 nodes out there working on Bitcoin and verifying these transactions, they would need 5,001 of these nodes to work in their favor in order to change, duplicate, or erase something from the blockchain. It's not impossible, but the reward would be incredibly worthless considering all those who mine it legitimately would probably split off to a new blockchain. So what is a blockchain? A blockchain collects information together in groups known as blocks. Blocks have storage capacities, and when they close, they link to another previously filled block. I think this is about 1 megabyte of space. So once that's filled, they close it up and they attach it to a blockchain. I'll put the list down in the slideshow so you can understand that the transaction is entered. It's then transmitted to millions of people all over the world trying to verify this transaction. The network solves that equation. Once it's legitimate, it's clustered into blocks. Once you complete that block, it's then put together with others, making a blockchain. Transaction is complete. It's immutable. You can't change it. It's time stamped, and the address is encrypted, almost not encrypted, but it's a pretty tough code to break. So what are these codes that need breaking? Well, mining is a process in which new bitcoins are entered into circulation, or just coins in general. It uses sophisticated hardware like graphics processing units or ASICs to solve these complex computational math problems. It's like a 64 character long code that tells you exactly how the transaction was started and formed. If the transaction is different, the algorithm will change this code, and then it's different. The first computer to find the solution to this problem is awarded the first person to solve this problem is awarded bitcoins for the process, and then it started again. So keep in mind the reward is halved every 210,000 blocks. So right now you're probably getting about 6 bitcoins per block that you mine. It typically takes about 10 minutes to mine a block. So after those 210,000, the reward will drop to about 3 bitcoins per block, and then 1.5, and then you get where I'm going with this. So what does that say for the future of Bitcoin? Well, Bitcoin is here to combat inflation, as well as gold. U.S. inflation rate is currently 6.2%. Bitcoin is not tied to a single currency or economy, so the exchange is almost fluid amongst other dealers, no matter their position in the world. So Bitcoin has a limited supply, so increased circulation has no detrimental value on the price, unless you were to burn these coins. Burning coins means you're taking coins out of circulation, therefore making the remaining more valuable. It's more scarce, but I don't see Bitcoin doing that. That's just my speculation. Now, understand Bitcoin is also easily interchangeable, secure, and it's literally scarce. Almost all of what gold is not. Gold has to be stored and transported with heavily armed security trucks. You have to build up walls, and Fort Knox, I don't even think carries any gold, but you see the walls around it, you see the security around it, different things like that. Bitcoin is all online, stored on the blockchain. It does take a lot of power to mine this stuff and to keep it running. However, due to Elon Musk wanting to make it more eco-friendly, the world is now pushing towards that. It's not regulated right now, and you know how the government feels about that, so price is extremely volatile, especially since the market is open 24/7. Understand that there are other coins on the exchange, and Bitcoin is not the tell-all and the holy grail for cryptocurrency. Every day new coins are created, and there's tens of thousands out there right now. Stellar, to name one, Ethereum, to name another, started back in 2015. And there are tons of differences when it comes to these coins. So like for instance, Bitcoin takes about 10 minutes to create a block, Ethereum 15 seconds. Bitcoin authorizes 7 transactions a second. EOS has potential for 2,800. Now we are very behind as far as Visa and MasterCard transactions per second. They can go into the higher thousands. But those who wish to really pursue the idea of cryptocurrency will understand there are others out there that can reach that capacity or beyond it. And it's not always about the fastest transactions, it's about the transactions that will honestly cost you less in fees and be secure in the long run. Those who operate on a network such as Ethereum have no limit of supply. I talked about that earlier. It's basically, if you lose a lot of Ethereum, that amount of which it's mined to an unlimited extent will combat that. So they lose this much in a year, but they make this much in a year. So in a way, it almost evens out. Whereas Bitcoin, if you lose it, there will always just be 21 million. That's where they see the key differences. And also Ethereum can branch off, and there are so many coins on the Ethereum blockchain, it's ridiculous, whereas Bitcoin is just Bitcoin. So understand that there are a lot of differences between them, and follow along with the rest of my YouTube and understand what these differences are and how they play a vital role in today's market. Exchanges can provide you the opportunity to buy or short these coins. For example, Crypto.com, Coinbase, Robinhood, Binance, you can all buy the coin in hopes that it will go to the moon. Best places to short Bitcoin, so basically the best way to describe that is if you borrow Bitcoin from one person, 1 million Bitcoin from one person, and you sell it at a higher price, you are getting that money for 1 million Bitcoin, and then once the price drops, you're gonna buy it back. So you're gonna sell off those borrowed shares, and then you're gonna buy it back. So that lump of money that you didn't spend on that now lower price of Bitcoin is yours to keep, because you just take those Bitcoins that you just bought and give them back to the borrower. That's the best way to explain shorting. There's a lot more to it, but for the most part, the best places to short Bitcoin or any other coin is Kraken.com and eToro.com. All the exchanges and their benefits and their pros and cons will be weighed in later videos, but stick around and find out. With that being said, subscribe to my Patreon for price signals and alerts on the best times to buy and sell any coin on the base. Leave a comment and I'd be happy to dissect and confirm or deny different types of suspicions and arousals of price speculation. Follow along with my YouTube to continuously explore different cryptocurrencies such as Bitcoin, and personal finance tips daily. We'll be talking about taxes, insurance, everything that you need to know to get yourself into a financially free situation. So, thank you for joining. I hope you learned something valuable today. Follow along, ask any questions, and don't forget to like and subscribe. Have a good day.